Straight up or cue cards on that?
Straight up. New
Look
promo.
like you're looking off camera a little bit.
I was thinking hard.
They had like the SNL cue cards up
But
there
let's
for
face
you?
it, that's gold, Jerry. Gold.
It took them 30 takes. I watched.
That was in the control room. They will back me up.
They just said in my ear, one take.
One take.
They won't let me do those. You know that, right? Because I insist.
You're too good?
You go too long?
No, I said I'll only do them if I can use a British accent.
Only do it if you can do it for 3 minutes?
And they won't let me do it. So
Do it standing on your hands.
Happy Friday.
All right, welcome back. Welcome back. Let's talk about Workday. It's getting upgraded today to buy. Goldman Sachs tech analyst Heather Bellini says there are blue skies ahead for this cloud stock, noting the recent sell-off has created an attractive entry point. It's our call of the day. It's one of Cramer's cloud kings. What do you think about Workday, Josh Brown?
So I thought the most interesting section of the report was not even specific to Workday. Goldman took the 50 fastest growing software names that they cover, and they broke them into, I guess, 3 segments: low growth, middle of the road, and then the high growers. And they were pointing out that a lot of the opportunity is probably not in the highest growers because the multiple has gone up substantially, even in just the last few years, especially for the IPOs. On Workday specifically, I think the best part of this story is that, as Goldman points out, they now have serious momentum in bringing human capital management software into the financial segment. And that's where the momentum is. That's where a lot of new Fortune 500 companies are signing up within finance. They've got 27% market share overall, but only 2% of that financial market. So as they sign up big companies in our industry, that should be an interesting tailwind. So I like what they're saying. Valuation is high, but you got to pay up for outstanding growth stories like this.
Yeah, I see technology right now is continuing to move higher. You mentioned the FANGs and the relative underperformance, or maybe they're not leading the market higher. I think the FANG story of the prior 3 years was about technology and what it was giving to the consumer. A lot of the advances in the strength that we're seeing in technology right now is what is technology giving to the enterprise space. And Workday is a classic example of that if you think about the software. If you look at the competitors to it, you have Dynatrace, you have CrowdStrike, you have Citrix. Right now, Workday sets up as the best in breed of those type of names, unless now you want to go to a larger market cap, which I am in, which is Intuit, and there you'll find Microsoft, Adobe, Salesforce,
what about Adobe?
Those type of names. I think all 4 of those names are going to work because, again, I believe in the thesis that right now technology is disrupting and advancing the enterprise component of our economy. We've already done it with the consumer. Now we're shifting over a little bit, and it's about software. And again, these are names that can't be Amazoned.
Those are 2 great fundamental analyses, and it's augmented by the fact that momentum, if you get this trade deal, is going to keep these names going higher. For me as a value investor, I'm sorry to say, I just can't do it on momentum alone. The valuation doesn't support it, but that doesn't mean I'm saying sell these at all. It just means I have to stay true to my knitting, and I can't buy these here.
Right. I mean, you can only buy a Roku, for example.
Aren't we getting to that later? Are we getting to Roku later? I think it's on tap.
I know, but you opened the door with the can't give the evaluation thing.
I think the point, though, on companies spending on enterprise software is critical. I mean, this is the one place where companies will continue to spend. They may not go down the traditional investment or CapEx route, but they need to invest in these enterprise software companies, and they need to put the stuff on their platforms in order to be efficient and maintain, I think, healthy margins in a rising labor cost environment.
Yeah, you're dead right, Kate. The alternative to installing something like a Workday, as just one example, is having a whole lot more employees pushing paper around and having things take longer than they need to. So when you look at SaaS names that are in workplace and efficiency, like that's not a bell and whistle that a company is only buying in a good economy. It's actually the opposite. It's why we've had such high margins in the S&P 500 all these years, because they continue to spend here rather than stupid spending on things that are no longer efficient.
Do you have a most favored name in that group? I mean, you look at either the one Workday or
well, my name is Slack.
Adobe.
So Slack is my favorite of the group. And actually last night they came out and announced they have 12 million users and certain metrics up 30-40% from where people thought they would be in terms of daily active, et cetera. So I feel like that's my opportunity to play in this space.
I'm in Slack as well. Let's go back to the Workday, and I think the reasoning that Josh presented with the financial institution, the financials have a need for this technology.
Wait, didn't you buy Workday?
No, I bought Slack.
Oh, you bought Slack.
Work.
Right. Oh, right.
But Workday, listen, Workday was 226 down to 178 at Workday. But back to what Josh was saying before, financials need this type of software in order to look at the spending that JP Morgan and Goldman Sachs right now is focused on. Look at my comments before as it relates to Wells Fargo. Financials right now are about technology.
Yeah.